Okay, welcome back. We have Mphasis in focus. Stocks up 5%. Constant currency growth was down 0.1% Q on Q. Margins have come in closer to 15%. That's closer to the guidance range as well. Let's talk about this more. We have Nitin Rakesh and Manish Dugar joining in to take some questions on the business going forward. Gentlemen, good morning. Great to have you guys here on CNBC. Prashant this side. Nitin, I think you've spoken with investors, analysts in the morning, and what you've told them, the market's kind of lapped up. So why don't you tell us is it deal wins which are looking super strong, especially on the BFS side, etc. Just run us through what you're seeing out there.
No, Prashant, thank you for having us, and thank you for the kind words. I think we basically talked about what's going on in the business, both from a industry perspective, but more importantly, I think coming off of a difficult 23 in the industry, especially in the banking business, which is a big portion of our revenue. This is the second successive quarter of sequential growth in our BFS business, which I think is a great sign for the longer term growth prospects as we go through the remainder of FY25 as well. Secondly, we've seen some really good build up, not just in TCV. TCV was obviously up sharply QOQ. But we still have, a great demand, great visibility into the demand through the pipeline, which is actually up, 17% just sequential. So I think very broad-based pipeline across top clients, non-top 10 clients, BFS, non-BFS, across geographies and across verticals. So I think it's the broad basing of the visibility through the pipeline, good delivery on, TCV wins, second, quarter of sequential direct business growth, and of course the recovery in BFS. And I think those were some of the headwinds we faced last year. So this is really the fog lifting off of that uncertainty that's giving us a little bit of boost today.
Just to complete that point, last time after the earnings when you spoke, you said that smaller, shorter duration deals are the ones which have picked up and they convert quickly. Has that changed? Is it more? Are some of the larger deals also coming in that pipeline?
Yes. Yeah, actually, not just in the pipeline, Prashant. In TCV that we announced this quarter of $319 million, we have three large deals. One is over $100 million, which is a good sign for the fact that clients are now feeling a lot more confident in undertaking what we are calling savings-led transformation deals. I think the other thing to call out in the pipeline is, we spent the last 18 months as an industry with our customers figuring out the potential of Gen AI, and now we are starting to see scale up of Gen AI-led deals. So a third of our pipeline is actually AI-led, and that gives us great hope that we'll not only be able to create a sustainable, longer-term business model around this new pivot, but more importantly, there are ways to create value for customers that give us a lot more stickiness.
Okay. Nitin, hi, good morning. This is actually great to hear because I think I haven't heard you this bullish in a while. Not bullish, but I guess just, relieved that recovery is coming through, especially in spaces like BFSI, etc. So I mean, just before we head to Manish, right, I just wanted you to complete that argument. BFS saw a 1.1% quarter-on-quarter growth. Now, a lot of peers are talking about green shoots, not just you, but green shoots across the board. Infosys said that that's happening in North America. TCS said that North America did better than Europe, etc. In terms of growth, what are we looking at? And geography-wise for BFS, can you just give us some more clarity on where the recovery is coming through?
Sonia, so we obviously, given that BFS is roughly half our business and BFSI is almost 60% of our business, we were probably one of the first ones to get impacted as the discretionary slowdown happened in BFSI in 2022. So at this point, I think we're very pleased that we were the first ones to show recovery at the end of Q3 last year. We called the bottom in that segment. We saw 2+% sequential growth in BFS in Q4 and another 1+% this quarter. We also closed a large $100+ million deal in BFS in Q1. I think this is still without any major uptick in the mortgage business. So that's an additional, event. That's a pure cyclical event. It's not when it'll, if it'll turn, it's really when it'll turn. So I think some of that optimism over the next 12, 18 months will also come through the pickup in that line. But I think it's a good sign. We are seeing banks typically being forward-leaning on adoption of new tech. As I mentioned, they spent the last 12, 18 months setting up their pipelines, figuring out the tool chain, and now very open to ideas that not only give them savings, but more importantly, give them transformation. So the narrative in a nutshell, the narrative is shifting from cost takeout to savings-led transformation, and that's great news for players like us.
Okay, well, Nitin, you've set the tone then. You're sounding rather optimistic about the future from here on. Let's try to get a couple of numbers. Manish, let's come across to you. You all mentioned last time around that FY25 will be better than FY24. The FY24 was a bit of a degrowth year. How much better can it be? Mid-single digit, close high single digit, if you could quantify that. And also your margin band is that 14.5 to around 16%. Towards the end of the year, do you see heading towards the higher end of the band?
Absolutely. We started the year, or rather, we ended the last year with a sequential growth, and we continued the sequential growth in the second quarter as well, which is Q1 of this year. And like Nitin mentioned, that gives us a tailwind for the year going forward. The pipeline and the TCV wins gives us confidence on what we expect in the coming quarters, and our guidance is that we would be able to deliver above industry average growth rate. So clearly, both in terms of percentage terms as well as in terms of relative performance versus the peer group, this should be a better year than last year. From a profitability perspective, philosophy has been to invest for growth while maintaining margin in a narrow band. We had guided to a range of 14.6% to 16% margin for the year, and we delivered 14.9 last quarter, and we delivered a 15 this quarter. Last quarter, the margin had a one-time upsides, and this quarter, despite those one-time upsides mostly not being there, we were able to actually expand the margin over the last quarter. Going forward, we continue to have tailwinds to the margin, and as the revenue scale up happens, operating leverage plus utilization and the improvement in exchange realizations will all contribute to more tailwinds, which can help us invest while maintaining a northward bias to the margins. So from an overall perspective, we feel very confident that we should be able to certainly be within the range and maintain, if not expand the margin from the 15%.
Okay. Nitin, the other thing is that the company has been focusing a lot on diversifying revenue. I agree that, you were talking about such a big chunk coming in from BFSI, right? But you've been looking to diversify that and diversify your contribution from your top 10 clients as well. Where are we on that front and what's the progress?
I'll give you some statistics. So top 10 accounts grew 1.2% sequentially, but the next 20 grew 3.5% sequentially. That's definitely a metric that we are very happy with. New clients have grown at about 22% year over year, which as a segment is now starting to get meaningful, and we've put a lot of focus on the hunting piece. We also broke out the BFS versus non-BFS pipeline. I think the non-BFS pipeline is actually up 30% sequentially. So diversification away from just top 10 to the next 20 or next 30, diversification into other verticals outside of BFS. Diversification into areas like Canada and Europe. So our Europe business was up 10.5% YOY this quarter, which I think is the best growth we've seen in the last few quarters there as well. So I think multiple levers of diversification at play. It's as in a business portfolio, that's always a slow and steady climb. It's not a 1 or 2 quarter event, but the direction of travel is absolutely where we want it to be.
You said 1/3 of the pipeline is Gen AI, Nitin. How are margins in this work?
A little bit too early to call for that, Prashant. I think the first port of call was, is this really hype or there is some real substance in enabling efficiency and solving problems that were far too complex. So we actually announced the launch of 2 platforms today. One of them is a Gen AI-enabled modernization relearn platform that actually disentangles complexity from legacy applications, by applying Gen AI to extract logic. So I think right now we are focused more on the value that we can create. Pricing and margins, this isn't really a rate card play or a managed capacity play at this point. This will definitely become a value-based pricing play, but a little bit too early to call for that. Obviously, we would like operating leverage. We would like some non-linearity to come into the business, but very hard to say, how we'll be able to manage that kind of change with both customers and of course our own field. So early days, but again, direction of travel is in the right direction.
US mortgage segment is what percentage of your business?
It's about 6% of revenue. It grew sequentially, marginally this quarter. We had seen it stabilize towards the end of last calendar year, and in Q4 and Q4 it grew very minimally. Q1 it grew a little bit more, about 2% or so. It's about 6% of revenue, but as I said, it's very hard to call the macro. So we are not baking any major, event-driven triggers there. As I mentioned, it's not if it will happen, but when the cycle will turn. And as that cycle turns and we see some pent-up demand there, I think that should be a good tailwind as well.
Nitin, besides the company, for the industry, what kind of growth are you looking at for the coming fiscal?
It's hard to call. I mean, if you look at the weighted average forecast, I think it seems like in the low to mid single digits at this point in time. I guess as we go through the year and as the client, I mean, it's not like the discretionary environment has changed dramatically in the last, 1 quarter. It's just that the client's openness and at least there is a consensus on a soft landing, visibility in the U.S. Again, every day there are new data points, including the GDP data from last night. So I think there is definitely more openness to having conversations and potentially, originating ideas based on transformation, and how quickly that ramps up will determine where the industry heads into. But I also think there's going to be a redistribution of market share in terms of, adoption of new tech, and some segments of the industry will definitely see some headwinds, especially as Gen AI adoption picks up scale.
All right, and you'll outgrow the industry by around 1.2, 1.3 times? Or more?
Hard, we're at this point just saying we will grow faster than industry. We haven't quantified that, and as we get more visibility, we'll do that.
Good, great conversation as always. Manish as well as Nitin, thanks a lot for joining in. You're sounding optimistic about the future. The street is buying into that as well. Explains why the stock now at the high point of the day as we speak.